Good evening, everybody. Welcome to a new year and a new schedule for the Profiteer recap videos. Today we're going to be covering the Ultra Bond trade that we did today on the 30-year plus futures contract. If you are not familiar with the bonds, we can cover that another time. But in this video, what we're going to talk about is just a quick understanding of why we took the long trade on the Ultra Bond today at an entry point of 183 for 30 seconds. Or if you're not familiar with the way that bonds are priced, they're priced in fractions. So it's basically priced at 183.4 divided by 32. That's not what we're going to get into today. What matters is it trades and is structured like any other asset class, in the sense that it is going to be a order flow, technical landscape, sentiment, and fundamentally based trade, just like everything else. On this particular trade today, we took it due to a breakout above a developing value area that was sort of kind of lacking liquidity, and that area is the 182.630 seconds, and that area broke out of a technical pitchfork, which can be found in the PMP channel that we just added. And you guys know how much I use pitchforks. So initially, the technical break here of this dotted line where the pink arrow is was where we decided that we were going to be looking for longs. We didn't really get a chance to get a pullback out of that early morning breakout, so we just went ahead and confirmed the entry once the clearing range of the U.S. cash equity, held above that VWAP range, and of course above this opening range, which is the fixed income pit trading. So just like gold and just like oil, you get sort of behavioral priced action based on those time cycles. And we mentioned in the chat that we would be getting out of this trade by 11 o'clock Eastern, which is exactly where we got out, because that was right when the turn occurred. And the initial fundamental catalyst was the 38 billion and 36 billion in treasury notes that was sold. So I won't get into those because it can get kind of hairy, but overall, technically and fundamentally, we had a respected pullback off of the developing value area within those two important time cycles. The first one being the pit trading session for fixed income markets, which is at 8:20, just like gold, and then the U.S. cash equity open at 9:30, and then just wanted to kind of embellish the time price opportunity here, so you can see that we pretty much took off after breaking that midline and headed straight for this tiny little liquidity gap here. Now, although we're kind of teetering in the value area of a monthly sort of view, we still needed to kind of move through these sort of liquidity gaps, especially after that large liquidity drain, and the lower yield curve, the back end lower yield curve, so the 30-year and the 20-year today pulled back a bit. So all in all, I'll be looking for just how we develop on a monthly basis to get more of a kind of larger size trade. But overall, this was what I wanted to share with you guys, and we'll be at it again tomorrow. Thanks everybody, and have a great day.